This is the luxury world. Get inspired with us today and tomorrow. The Rolex, an emblem of luxury, prestige, and lasting quality. For years, these sought-after watches have maintained their worth, often appreciating in the secondary market. However, a major upheaval has shaken the watch industry. The once invincible Rolex market has seen a dramatic decline. In today's video brought to you by the Luxury World, we will investigate the causes of this surprising downturn, examining how economic uncertainty and shifting consumer behavior are transforming the Rolex ownership landscape. We will also look at the effects on both collectors and authorized dealers, and consider whether this crash represents a permanent correction or a temporary dip in Rolex's storied history. So, gear up, watch enthusiasts, as we dissect the Rolex market crash and analyze how the crown may have faltered, but the Rolex legacy endures. If you have not subscribed to our channel yet, we encourage you to do so now to stay informed about our future videos. We are here to understand the underlying reasons behind shifts in the Rolex market. It is not just about numbers, it is about the economic forces and principles shaping consumer behavior, market trends, and the ultimate value of our beloved timepieces. To understand the Rolex market shift, we need to start with some economic fundamentals. Let us talk about indifference curves and consumer behavior. Simply put, an indifference curve represents a consumer's preferences for different combinations of goods or services that provide equal satisfaction. It is all about the trade-offs we make in our purchasing decisions. Here is where it gets interesting. We are seeing a significant shift in consumer behavior regarding Rolex watches. Consumers are moving along the indifference curve. Instead of prioritizing these luxury timepieces, they are increasingly substituting them for unique experiences. This could mean opting for a once-in-a-lifetime travel adventure, investing in a new hobby, or pursuing personal growth opportunities. The focus is shifting from material possessions to experiential value. But what does this mean for how we understand market trends and pricing models? How do these changing consumer preferences impact the way we analyze and predict the Rolex market? That is exactly what we will explore next. Let us discuss the limitations of current models in capturing these shifts in consumer preferences. It is important to understand the underlying methodology. Watch charts use the Spears Index, a price index formula that measures the change in prices of a fixed basket of goods over time. It is simply a valuable tool for monitoring price movements, but it has its limitations. One of the key drawbacks of the Spears model is that it does not account for consumer shifts in response to price changes, as precisely the preference shifts we are witnessing now. As prices fluctuate, consumers adapt their buying habits, substituting some goods for others. The Spears model, with its fixed basket of goods, fails to capture this dynamic. This means that while watch charts provide valuable data on price movements, they may not fully reflect the underlying shifts in consumer behavior and preferences. It is crucial to understand these limitations when interpreting market trends and making predictions. How did the pandemic shape this market, and why are some brands more vulnerable than others? To answer this, we need to examine the circumstances that led to the current Rolex market shift. Let us take a closer look at how the pandemic influenced the watch market. These charts from Watch Charts tell an intriguing story. In the first chart, you can see that only Rolex and the Holy Trinity brands, which are Patek Philippe, Audemars Piguet, and Vacheron Constantin, experienced a massive surge in prices during the pandemic shutdowns. This hype was fueled by a combination of factors, including scarcity, speculation, and a shift in consumer spending habits as everyone was locked down. However, the second chart reveals that even after the recent price crash, these brands remain vulnerable to ongoing consumer shifts. While the overall market has stabilized, Rolex and the Holy Trinity are still trading at significantly higher levels compared to other luxury watch brands like Omega and Seiko. This suggests that the demand for these hype brands was largely driven by temporary factors rather than a fundamental change in consumer behavior. As the market continues to adapt and evolve in the post-pandemic reality, Rolex and the Holy Trinity may face additional challenges in maintaining their premium positions. The next chart is crucial as it shows that Rolex, in particular, was highly vulnerable to a significant drop in demand. There is an increase in available inventory and an even larger drop in sales turnover, which is very telling. So, if the demand for luxury watches is changing, what new status symbols are people turning to? This also shows how consumers are redefining success and sophistication in this new era. Consumers are increasingly drawn to activities that offer both personal fulfillment and social currency. These experiences are becoming the new markers of success and sophistication. Interestingly, this trend is not limited to younger generations. Consumers of all ages are embracing the idea of exponential luxury, recognizing that memories and personal growth often hold more value than material possessions. How are economic factors influencing this shift in consumer behavior, and what does it mean for the future of the luxury watch market? Despite reports of declining inflation, consumers are still feeling the pinch, a key factor contributing to ongoing financial pressure, which is the housing prices. While the overall consumer price index has been trending downward, the drop in housing prices has been much slower. This means that even as other costs drop or stabilize, the significant expense of housing continues to burden consumers, limiting their disposable income and curtailing their spending decisions. Moreover, high interest rates further compound this issue. As borrowing costs remain elevated, consumers face increased monthly payments on mortgages, car loans, and credit card balances. These economic pressures have a direct impact on the luxury watch market. As consumers grapple with ongoing financial constraints, the demand for non-essential high-ticket items is likely to remain subdued. The shift in priorities may further accelerate the move away from traditional status symbols like Rolex watches toward more experiential and financially prudent alternatives. We are observing this trend across the entire luxury goods market. As we look to the future, another critical factor comes into play: the supply of Rolex watches. A significant development is on the horizon for Rolex, as the brand plans to open a temporary factory in 2025, followed by a more permanent facility in 2026. This expansion in production capacity has the potential to reshape the Rolex market in the coming years. As Rolex increases its output, the scarcity that has long driven the brand's premium pricing will likely begin to ease. With more watches available in the market, the supply-demand dynamics will likely shift, leading to a stabilization or even a decline in prices for more models than we see now. However, it is essential to consider that Rolex's brand value and prestige extend beyond simple supply and demand. The company's reputation for quality, heritage, and exclusivity has been carefully cultivated over decades. Nonetheless, the future supply dynamics introduce a new variable into the equation. As more Rolex watches become available, consumers will have greater choice and negotiating power. This could lead to a more balanced, healthier market where prices more accurately reflect the intrinsic value of the timepieces rather than the artificial scarcity that has fueled speculation and flipping in recent years. But what does all this mean for the future of Rolex and the Swiss luxury watch industry as a whole? How will changes in consumer preferences, economic pressures, and evolving supply dynamics shape the landscape of luxury timepieces in the years to come? Let us take a step back and consider the bigger picture. As consumers continue to prioritize unique experiences over material possessions, the demand for traditional luxury watches may face a sustained decline. The allure of heritage and craftsmanship, while still important to some, may not hold the same sway over a generation that values Instagram-worthy moments and personal growth over tangible assets. Brands that fail to adapt to these changing preferences and find ways to connect with the new generation of luxury consumers may face declining sales and market share. What are your thoughts on the topic that we shared in this video? If you enjoyed the video, we would appreciate it if you let us know by leaving a comment and giving it a thumbs up. Do not forget to follow our channel for more content. Thank you for watching The Luxury World, and we look forward to having you join us in our upcoming videos.